Good morning, traders. It is Friday, May the 17th. Taking a look at the morning charts, we've got the weekly chart of the US dollar. You can see where we stand in the grand scheme of things. It looks as though it's trying to break out. We do have this previous high right across here. It's been flirting with for the last 2 days. It's holding up relatively well. If it does pop above that level, we're likely going to see the US dollar take a run for this blue resistance zone, which are these previous highs. If we do see that, then likely going to see commodities like silver and gold pull back fairly sharply. Excuse me, and probably continue to see bonds and kind of linger down in their lower areas. Now, if we just zoom into the shorter term chart, we'll go to the 4 hour chart. You can see where we stand in the grand scheme of things. It's been forming over the past week, a series of bull flags. It's come up, bull flag, come up, another bull flag forming, and this is still pointing to higher prices. If it can pop here, it's trading at this resistance zone, we could see it start another push higher, and this would be kind of the breakout of a previous high from back on the chart that would likely trigger a pretty strong move up in the US dollar index. The question is, are stocks going to follow that? It seems that stocks have been following it more than not this year. So if we do see that happen, we might see stocks squeeze higher with the US dollar. But overall, if this big run in the US dollar does take off, if this does ignite a strong US dollar rally, then I got a feeling it's going to put pressure on US equities, and we're probably going to see them pull back along with precious metals. Taking a look at precious metals, they were trading down yesterday. Gold traded down, and silver was down sharply in the morning, about 1.5% or 2%, but it recovered and actually ended up being fairly positive on the day. Excuse me. Overall, silver came down to a pretty key support zone, which is right down into this congestion area right down here. Hit that level, had a little bit of a bounce. Doesn't look like much on the chart because overall in the grand scheme of things it was a very small bounce yesterday, but we're continuing to trade back down at those levels this morning. It looks as though the market has got fear in it, and that it's going to keep grinding away at the support zone and eventually likely see it break and pop to the downside and pierce these lows to really shake the market out. The question is it going to be a pierce, or is it and recover quickly, or is it going to be a breakdown and we see another major leg down like this where it's just a complete multi-day sell-off and people around the world just start unloading gold and silver in pure panic that the move is over and they just want to get into stocks, regular stocks. Again, sorry, this was the silver chart. Looking at the flipping to the daily chart, just so you can see where we stand in the grand scheme of things. For the gold chart, here we've got this high and this low, and we can see we came up into this upper end of this bearish candle, and now we've kind of rolled over, and now we're picking up speed to the downside. Volume is slowly ramping up. Selling and panic is starting to slowly creep into the market. We're right down, getting down to that 1360 area, which more or less we've got a couple candles kind of closing and opening and bottoms here at that zone. If we break that level again, we're probably going to see a pretty quick pierce to the downside. The question is that pierce going to turn into a big downward slide or just a sharp recovery, and we'll start to see some bullish price action from there. Overall, we've got our eyes on it. We're going to see how things unfold. Now let's take a quick look at silver. Here's the silver chart, and silver came down to that key support zone yesterday, right down into this previous spike low where it had a huge wave of, or not a huge wave, but a strong recovery on some decent volume, but overall nothing compared to the selling volume that happened a couple days prior. Overall, silver came down to that level, opened up in the morning, and then boom, had a quick pop back up. Again, very nominal bounce. It seemed some people got really excited about that bounce, but you look at it on this 4-hour chart, and that little bounce yesterday really didn't mean a whole lot of anything. It's just a bounce off support and selling. We're continuing to see selling pressure this morning. Gold's down about 0.6%. Silver's down about 0.8%. And if we break this low, we're going to there's potential that we could see silver drop all the way down to the $20 an ounce, which is a whole number. It's also a major support zone. If we just go to the weekly chart, it'd be a fairly clear chart, I think here. The 20 level is going to be a fairly key support zone. This is when we had a big consolidation, more or less a large cup and handle pattern where it broke out and went parabolic. Coming back down to that level, 20 is a whole number. It's a decade number. Naturally, people are going to say, well, I want to buy, if it gets to 20, I'll buy silver. That naturally forms some type of support there. It's also a pretty key breakout down here. Now, it may not stop dead at 20, but usually once it touches 20, you'll see a quick bounce. It might just be an intraday bounce, but overall, support zone is really going to be in this whole range. There's a big range here, 16 to 20. That's where all the volume really traded back here. So there's potential for silver to landslide into the middle of this range and try and find support. So there is a potential for still a lot of downside in silver. So we'll see how that kind of unfolds and how the volume plays out and what the equity market does on top of that, and miners. Again, if gold and silver sell off really hard and the miners don't really push to new lows, or they barely make new lows, then that's probably a sign that gold and silver are starting to bottom here this week or next week, and that they're likely going to put in a bottom. But if miners drop and start bombing another 5, 10, 15% from where we are, then I think we're going to continue to see strong selling in gold and silver, and they could come deeper into this zone. Taking a look at miners this morning. Again, miners were open low yesterday. They jumped up and got bought back up in the morning. They ended up being actually the strongest sector yesterday, other than technology, with Cisco Systems really lifting things up, and Apple. But overall, we gapped lower yesterday, and we saw a quick bounce in the morning. Now in the afternoon, it kind of faded, and this morning we're trading down a little bit. We're down about 0.5% this morning on miners. Gold, silver miners, same thing. They're both looking like they're going to open a little bit lower at this time. Overall, though, the grand scheme of things, still trending down and still kind of making new lows here. So the question is, how steep is this last drop in gold miners really going to be as gold and silver test these previous key lows? Now let's just take a quick look at bonds. Bonds is a good indicator of fear and where money is going. Yesterday, of course, we had really poor economic numbers. Pretty much everything across the board was, they weren't extremely bad, but they weren't good by any means. They're all red, negative. Of course, that fear jumped up and people jumped into bonds. Of course, it pushed above this previous pivot high, which is a good sign. That's the first sign that we've got an impulse wave to the upside, breaking a previous high over here. And really, we kind of need to break a couple previous highs. I'd like to maybe see this high broken. Just breaking one high isn't significant enough, and we really want to see some type of, if we can get a nice pullback, a bull flag down in here, I'd be more inclined to start to look for a long position in bonds. We could have a stop set somewhere around this level down here, this previous pivot low, and there's lots of congestion through here. If you were to zoom in on the intraday chart and do volume by price, you'd see there's a key support zone there. If it does come down to this level, it could be an opportunity for us to get in to start to see multi-waves back up to the upper end of this range here. Taking a look at energies, here's the crude oil chart. Crude oil is starting to look somewhat interesting here. We are getting into this pennant formation where things become a little more unstable, but overall, if we were to just zoom in a bit and draw a couple lines, you go across these tops where we've been hitting resistance. We had this trend line, the support trend line, kind of break down here this week, and we've seen a bounce back up. Now we have had some decent volume on that bounce back up, but overall we are coming into resistance. Now if we actually just drop down to a shorter time frame, put on price at volume, and we zoom into this last run here, you can see the volume, this blue volume here, the highest level is trading right across here. So we're right back into resistance. We kind of had this support trend line breakdown. We've kind of bounced off it, came back down, bounced off it, and then we saw price break down. Now we're seeing it kind of drift back up, and it's forming a tight little support wedge here, almost like a bearish wedge. It is coming right up into this resistance zone. If you look here, you can see we've got high volume right across this level. Might be looking at going at the SCO ETF, which is a 2 times inverse oil ETF, and of course we could put a pivot high, a stop somewhere here or right here, putting about 1 or 2% stop on it. If this does play out, this could be a pretty good wave to the downside to the 91.90 area, which we've got this red support trend line, and of course we've got this previous pivot low over here. So that's kind of one thing I'm looking at for possibly today, and I'll keep you posted on that. Looking at natural gas, not a fan of the chart. We had inventories out. We saw it plummet about 5.5%. Again, I'm not a big fan of natural gas simply because it can do these sharp moves in a blink of an eye, and sometimes natural gas has got some good setups and it's got some nice plays, but really overall the chart this year hasn't been anything exciting. It's one of the least things I would be interested really in getting involved in right now. Taking a look at the SP500, here's the daily chart of the SPY. You can see we're starting to pick up speed to the upside, and the trend remains up. We did trade sideways here for a couple sessions, for about 4 sessions, and then consolidating, and then it had another pop. Likely going to see it consolidate. If it doesn't consolidate here, I think we're going to start to roll over. More or less, when you start to get these expansion bars where price really takes off, usually those are the last couple of days when price usually tops out for the market. So we'll see if we start to get that top out. Now if we look at the intraday chart, you can see a little bit of a bearish pattern here. This is the futures of the SP500. This is a 10-minute chart, and just looking at this price action here for the past, we'll just go the past week. So this is Monday all the way till this morning. We have had we've got a possible, we had a kind of a bullish shoulder here, kind of a double head here, and now we've got this looks as though almost like a broken arm. It's like a head and shoulders kind of level here, potential that price might break down. Now if you notice in an uptrend, you'll see the market pull up, it'll consolidate, rally, consolidate, rally, consolidate, and then we kind of got this double head, and now we've got this strong leg to the downside, breaking a bunch of minor support zones. That created some fear yesterday. We can see the fear in the volume. It picked up, so we ran those minor stops. That gave us a possible double head up here, and now we've kind of got this broken limb, this kind of arm that isn't, instead of an arm going straight up and flagging, it's just kind of hanging there, and it's very bearish looking, and it looks as though it points to the downside on the equities market. And if it does come down, the downside potential is somewhere around the 1640, 1637 area. And if, depending on how much fear hits the market, we would likely come right back down into this next key support zone. You can see the volume here. This blue horizontal volume. The next major support box where there's actually going to be some volume to support price is down here, all the way down to the about 1630 is the middle of that range. And again, you can see there's no really volume traded in here. So once we start to break down and these stops get run, we'll have stops set below yesterday's pivot low. We're going to have a key stop set right around here, and then that stop is actually pretty strong. There's another pivot right there. So once price starts to break down, if fear kicks in, we could easily not just do the measured move, but actually continue to go farther, because there's a lack of support here. It's just an open window in price that there will be nobody there to really catch the sellers. It'll just free fall quickly through it, and then it'll find a bunch of people down here looking to accumulate and reload and support the price. So that's kind of what I'm looking at. Overall, you don't really want to short the equities market. If anything, I'm more interested in crude oil. Poor economic numbers is not good on oil. Higher dollar is not good on oil, and so that's kind of where I'm leaning, is towards a short oil play going forward. The equities market needs to pull back more before we get long. If we get a sharp reversal and the trend starts to shift, then we'll be looking to short it. It's pretty simple. We just have to wait for those patterns. Unfortunately, the market has taken off. It shook us out. It's taken off. It's never had a proper dip for us to get back in. And unfortunately, that's just kind of the way the market goes sometimes. But overall, things are starting to unfold for a possible significant reversal in the equities market, and we might actually have a downtrend going for a month or two that we can make some decent money on downtrend, as they happen fast, and they generate some pretty decent gains in a short period of time. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.